Hi and welcome. Change is there everywhere. And in the field of financial reporting or in accounting, we also see a lot many changes. There was a time when we were following a system which is referred to as single entry system of accounting. Today it is totally outdated. Nowadays we are following a system which is referred to as double entry system of accounting. But I believe that many of you might have heard a concept called as triple entry system of accounting. Our today's discussion is on that. Give me a moment to share my screen and we'll be discussing all the relevant issues, or in fact, we'll be having a basic understanding on that subject. I believe screen is shared. Yes, friends, to understand this particular concept called as triple entry system of accounting, let me start with an example, a situation, in fact. So we know in double entry system, what we do, one account is debited, one account is credited. Let us see a particular seller's books of account, and we'll also parallelly see how transactions are recorded in buyer's books of account. Suppose a credit sale is made, a seller makes an entry, buyer's account debit to sales. Buyer also makes an entry, purchase account debit to seller's account. Normally, this kind of entries are passed, but there is always a possibility that possibility of error. Suppose buyer is recording at 9,000 rupees, seller might be recording at, let us say, 8,000 rupees by mistake, let us say. So therefore, we need to reconcile these amounts. And reconciliation is an integral part of double entry system of accounting. So every year, or every time we need to reconcile whether what is shown in my books of account is exactly matching in the other party's books of account. And many times, therefore, we do, those who are practically do accounting, they can understand. We do reconciliation or we match it with some records which are maintained some third parties. Let us say many times purchaser matches its purchase transaction with GST portal. It compares the purchase transaction with GST at 2A or GST at 2B to find out the purchases that whatever is recorded is correct or not. Is there any purchase transaction which is missed out or not? Right. So there is a need to be assured that my purchase is correct. So this kind of reconciliation is integral in double entry system of accounting. Let me give you another situation. Let us say this is an employer-employee situation we'll be talking about. Employer makes salary payment. So salary account debit to bank account. Assuming that employee is also recording the transaction, he will definitely record like this: bank account debit to salary account. But there is always a possibility that there might be some difference. Why there will be difference? Employer might have deducted something. Employer might have deducted, let us say, some recovery. Employee might have thought it is deduction is on account of TDS. So these possibilities are there. So there might be some differences. Therefore, reconciliation is required. So normally what employees do, they compare it with their data available in income tax portal. Maybe it is form 26S, or maybe it is form 168, or AIS data, TIS data available in the income tax portal. Those data are referred to find out that whether the transaction is correct or not. So here also, if see, reconciliation is essential. One more situation I'm giving you, let us say a contractor and contractor situation. When payment is made to the contractor, okay, when the payment is made by a party, so normally what will happen? Contractor's account will be debited to bank account. And contractee also making a record like this: bank account debit to contractee's account. Right. Now, in this situation, what will happen? Here also reconciliation is required, because again, the party who has given the contract might have deducted some amount. Contractee might have understood differently, or there is a possibility of error also. Let us say the amount is by mistake recorded in some other amount. Here also, the data need to be reconciled. So normally, Here also parties compared with 26As for 168 or AIS, DIS to find out whether the amount is correct or not. Right. Now, friends, we have understood that reconciliation is essential in case of double entry system of accounting. Because what I am recording, that may not be correct. Because I am recording as per my judgment. So if at this stage, if you compare that double entry system is specifically an opinion. That means we are recording our opinion. Suppose an amount is deducted, we are thinking they might have deducted TDS. We are recording as TDS deduction. But party might have kept some money as like a retention amount. So that is his opinion that I'll be deducting because I need to retain some money. So therefore, since we are recording on the basis of our opinion, that needs reconciliation. Now you see how lovely it will be if this reconciliation process can be avoided. The reconciliation process can be avoided if only facts can be recorded, not opinion, only facts can be recorded. So that is possible if you involve a third party. With a third party, another record will be created. Typically, you can say cryptographically one receipt, a signed receipt or ledger can be created on a blockchain. I believe many of you might have understood what is blockchain. Block means you can say a file is created. In a chain means different files can be referred to different links of a chain. Suppose one old chain will be there, that old file will be there. New file will be also placed. Then further new file will also be placed. So that will create a block of a chain of files that can be referred to the blockchain. Okay. So under triple entry system of accounting, what happens? A file is maintained or a ledger is maintained on a blockchain. Once that is maintained, that ledger will show the fact. So therefore, reconciliation can be totally eliminated and an audit trail can be created. Now, if you understand, whenever an entry is made, suppose sales entry is recognized or purchase a transaction is recognized, or let us say cash payment is made or cash payment is received. In all these situations, books of account will be recording the transaction, and at the same time a third entry will be made in blockchain. So that third entry will eliminate the reconciliation. That is why we call it as the triple entry system of accounting. If you look into, let us say, seller's book and buyer's book, these entries will be made, but third entry will also be there. The basic thing is that this is triple entry is just an extension of traditional accounting. It adds a third cryptographically secured entry to be shared public ledger on blockchain. It prevents fraud and totally eliminates the concept of reconciliation. It builds trust between the parties because here facts are recorded, not opinions. If you look at the key concepts of triple entry system of accounting, there is a shared single ledger. All parties record their transaction in that ledger. It is cryptographically verified. It is digitally signed, time stamped, and it creates an unmutable audit trail. Reconciliation is automated. And with the help of this ledger or with the help of this kind of blockchain accounting, real-time audit is possible. And at this stage, if you compare single entry, double entry, triple entry, we can make a table like this. Under single entry, what we are doing, one ledger, we are recording entries in one particular ledger and narrative records are kept. Narrative records about inflows and outflows are kept. This is history now. Single entry you can totally eliminate today. But double entry, what we do? We make a debit entry, we make a credit entry, two different ledgers. But reconciliation is needed to make these books of accounts more reliable. And under triple entry system of accounting, debits and credits entries are made and a cryptographic receipt is generated. So two entries plus one additional entry, which is kept in blockchain. So it ensures reliance. So books of account with reliance is placed on cryptography and consensus. So that is why triple entry in future, we all of us, we are definitely going to experience what is triple entry system of accounting, and this will add a lot of trust and a lot of values to accounting. Thank you. I trust this topic is useful to you. Thank you very, very much. Thanks a lot.